Hello everyone, welcome to our video on how to invest in real estate. In this video, we will be discussing different ways and methods to invest in real estate and how much you can expect to earn. Method 1. Traditional rental properties. One of the most common ways to invest in real estate is through buying rental properties. This involves purchasing a property and renting it out to tenants. The rental income can provide a steady stream of cash flow, and the property can appreciate in value over time. You can expect to earn anywhere from 5 to 10% return on your investment depending on the location, condition, and type of property. Method 2. Real estate investment trusts, REITs. If you want to invest in real estate without the hassle of being a landlord, then real estate investment trusts, REITs, are a good option. REITs allow you to invest in a diversified portfolio of properties and earn a share of the income generated. You can buy REITs on the stock market and they can provide a steady stream of dividend income. The return on your investment can vary depending on the performance of the REITs. Method 3. Fix and flip. Another way to invest in real estate is through fix and flip. This involves buying a property, fixing it up, and then selling it for a profit. This can be a quick way to make a profit, but it also comes with a high level of risk. You can expect to earn anywhere from 5 to 20% return on your investment depending on the location, condition, and type of property. Method 4. Wholesaling. Wholesaling is a way to make money in real estate by finding properties that are undervalued and then selling them to other investors for a profit. This can be a low-risk way to make money in real estate, but it also has a low earning potential. You can expect to earn anywhere from $5,000 to $10,000 per deal. Method 5. Leverage. Leverage is the use of borrowed money to increase the potential returns on investment. In the context of real estate investing, leverage refers to using a mortgage or other loan to purchase a property. This allows the investor to purchase a property with a smaller amount of cash and potentially earn a higher return on their investment. For example, if an investor has $100,000 cash and wants to purchase a $500,000 property, they could put down a 20% down payment of $100,000 and borrow the remaining $400,000 from a lender. If the property's value increases by 10%, the investor's equity would increase by $50,000, resulting in a 50% return on their original cash investment. Method 6. Lease options. A lease option is a type of agreement in which a tenant rents a property for a specific period of time and has the option to purchase the property at the end of the lease period. This allows the tenant to live in the property while they save up for a down payment and build their credit. As the investor, you can charge a higher rent to compensate for the option fee and earn a profit when the tenant exercises the option to purchase the property. Method 7. House hacking. House hacking is a strategy where you live in one part of a multi-unit property and rent out the other units to cover your mortgage and living expenses. This allows you to live in a property for little or no money out of pocket while also earning rental income. This strategy can be a great way to get started in real estate investing and build equity in a property. Method 8. Vacation rentals. Investing in vacation rentals can be a great way to earn passive income in the form of rental income and capital appreciation. Platforms like Airbnb and Vrbo allow you to list your property for short-term rentals and reach a global audience of travelers. This can be a great way to earn money in popular vacation destinations. Method 9. Tax liens and deeds. Investing in tax liens and deeds is a way to earn money from delinquent property taxes. This involves purchasing the liens or deeds from the government at a discount and then collecting the delinquent taxes from the property owner. If the property owner does not pay the taxes, you may have the right to foreclose on the property and take ownership. Method 10. Commercial. Real estate. Investing in commercial real estate can be a more profitable way to earn money in real estate, but it also requires a larger investment and a higher level of risk. Commercial properties include office buildings, retail centers, and apartment buildings. By owning commercial property, you can earn money through rental income, capital appreciation, and tax benefits. Method 11. Real estate partnerships. Real estate partnerships involve pooling resources with other investors to purchase and manage a property. This allows you to invest in a property that you may not have been able to afford on your own and share the responsibilities and profits with other partners. Method 12. Real estate syndication. Real estate syndication is a way to invest in large-scale commercial properties by pooling money with other investors. In this method, a sponsor or a general partner raises money from investors, known as limited partners, and uses that money to purchase the property. The sponsor or general partner manages the property and the limited partners receive a share of the profits. Method 13. Real estate crowdfunding. Real estate crowdfunding is a way to invest in real estate projects by pooling money with other investors. Platforms like Realty Mogul, Fundrise and others allow you to invest in real estate projects with as little as $500. This allows you to invest in real estate projects that you might not have been able to afford on your own. Method 14, Self-Directed IRA or 401k. Another way to invest in real estate is through your retirement account. You can use a self-directed IRA or 401k to invest in real estate by using the funds from the account to purchase properties. This allows you to earn money from real estate investments while also saving for retirement. Method 15, Real Estate Development. Real estate development involves creating or renovating properties to increase their value. This can include building new houses, converting an existing building into apartments, or even building a shopping center. Real estate development can be a high-risk, high-reward investment, as it often involves a large amount of capital and a longer time horizon to see returns. Method 16, Real Estate Option. A real estate option is a contract that gives the buyer the right, but not the obligation, to purchase a property at a predetermined price and time. This allows the buyer to control the property without having to actually purchase it, and can be used as a way to invest in real estate without having to come up with a full purchase price. Method 17, Real Estate Notes. A real estate note is a promissory note that is secured by a piece of real estate. These notes can be bought and sold on the secondary market and can offer a higher return on investment than traditional fixed income investments. Method 18, Real Estate Investment Groups, REIGs. A real estate investment group, REIG, is a company that pools money from multiple investors to purchase and manage properties. These groups typically focus on a specific type of property, such as single-family homes or commercial properties, and provide investors with a share of the profits. Method 19, Hybrid Investment. Hybrid investment is a combination of different investment strategies, for example, combining traditional rental properties with vacation rentals, or combining fix and flip with wholesaling. This allows investors to diversify their portfolios and balance the risk and return of different strategies. Method 20, Real Estate Funds. Real estate funds are a way to invest in a diversified portfolio of real estate assets managed by a professional fund manager. These funds can provide investors with access to a wide range of real estate investments, such as commercial properties, residential properties, and REITs, with a lower investment threshold compared to direct investment in these assets. That's all for today's video on investing in real estate. We've covered the different ways you can invest in real estate and some things to consider before making a decision. Remember, real estate investing can be a great way to build wealth, but it's important to do your own research and due diligence before getting started. Don't forget to subscribe to our channel for more helpful content on investing and personal finance. And if you found this video helpful, please give it a like. In the description below, we've provided some helpful links to further resources and information on real estate investing. Be sure to check them out and let us know in the comments if you have any other questions or topics you'd like us to cover. Thanks for watching and we'll see you in the next video.